China is a bit nervous. There is so much headwinds towards it now, and I think it's right to prepare for the worst and expect the best. I still think there's some sort of positive news will come out between China and the US as we move towards midterm elections, but at the moment they need to prepare for the worst. Cutting the triple R rate does secure sentiments a little bit, does open up the coffers. I mean, as you highlighted, there's a new issuance of the bond, a very large issuance of the bond. What this normally does is, if a government comes in and issues their bond, it sets a floor, sets a line in the sand for the rest of the issuers to come. So if they issue at 100 over treasuries, basically you can get a lot of the other SMEs come in and issue 30 above that, 50 above that. It kind of sets the market that the big issues come in. The market is very likely to support this. You're probably going to get a lot of home buyers, a lot of banks come in and really hold this Chinese bond up. And then from there, it kind of opens up the door for other issuers to come and open. And if they can get the liquidity in during this period, it's going to mean a lot more stability.
Okay, so tell me how you expect equity markets in China to react as well, and what do you think the impact on the RMB is going to be?
Well, equity markets have been the closest kind of flag bearer for this whole trade wars trade. So I think equity is still going to be pretty volatile. I mean, they've come off a lot, we know that. Do we think they're going to pick up on the back of this? I think I'm a bit more dubious there. I think the better trade at the moment would be in Chinese bonds, particularly US dollar denominated, because the renminbi is still going to have some fears around there. I would highlight, though, it's a very dangerous trade to take on the renminbi. The government, I mean, hedge funds have done that many times in the past and haven't been very successful. I do think that the trade that most people are going to look for on the positive side will be in the Chinese bonds. On the equity is still a number of risks there around trade and uncertainty, and we still don't know what's going to happen going into the midterm elections. Is the US going to really make this an agenda point, or are they going to try find a bit of stability, try get inflation under control? Because, as we know, no populist government has really done well with the prices of their voted public going up aggressively. So I think the US has to manage inflation, which means they have to manage the trade wars. I think China's preparing for the worst, that they may decide that this is their agenda point.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.